All right, how's it going, traders? Sam here from TradeDevils.com and TradeDevils-Indicators.com. So today I want to go over a couple of things. Now, you may be here watching this video as a result of the email you received with us announcing this new program we're offering, or perhaps you are a YouTube sub and you got notification that we had a new video up. But either way, I wanted to go over this first and then show you some ways you might be able to take advantage of this to put together some combinations that might help you in the process of making better trading decisions. So let's just go over the program itself first. So I'm over here on this TradeDevils-Indicators.com, and you'll see up on the menu now we have an opportunity here for buy or lease. Oh, let's just go over this real quickly. So essentially what we're allowing you to do here is lease the indicators on a 30-day basis with some caveats here. Now, you're able to do this at 20% of the purchase price of the indicator, right? So obviously, of course, you could just buy them for a one-time payment. Then you own them as a lifetime license. But one of the things that we often find, and that I get this feedback, is that people they're combining indicators. They're looking for the right combination. And it can be cost prohibitive if you're doing a little experimenting. Maybe you've made a purchase or invested in one or two or a couple of our indicators, and you're looking for the right combinations. Then new things are coming out, and you kind of like to look at that, and you're going, "God damn, this is getting expensive." So we wanted to try and create the opportunity for people to try different indicators without incurring unmanageable cost here in that process of putting together the right collection of indicators. So we're doing it this way so that you can get access to indicators and put together some combinations and see if it suits your trading style, your personality, and how you want to address the market. So you can lease them now for 20% of the indicator price per month, meaning that you have a couple options here. One, you could just after a month just in turn go buy it. The other is if you let it run for 5 months, you will in turn have paid the full price for the indicator, so it will transfer over to a lifetime license. If you follow me there. So thus the 20% off, right? It ends up being the exact same cost, except you're able to kind of step into it and confirm that you like the indicator, you want to continue to use it. Now, for example, let's say you tried one and you said, no, this doesn't suit my approach to the market, or I thought it would do this and I don't like that it does that. Whatever the case may be, you have the option to cancel the lease on whatever you've just made that investment in, and then swap out to something else. Now, we are not prorating this. So if you used it for 17 days and decided, oh, nope, I don't like this one, I want to try a different one, well, we can't prorate that, right? So you're going to be committed to the 20% of the cost for that 30-day window, right? So you're committed there. You could then at the end of the month, you could cancel any time in that 30-day window and just go to another one. But if you cancel at day 8, we're not going to prorate it for 8 days and then give you the balance back, right? So it's a one-time investment for that 20%. You've got full access for the month. If you don't cancel, it will renew. You'll have it for another month. Right, so let's be clear about that distinction. If you want to terminate, you got to send us the cancellation, and maybe you want to try something else, maybe you don't, but that's up to you. But that's an important distinction. So I'm kind of going into detail here so to eliminate additional questions here or a lack of clarity here in what we're offering to you. So just to be clear, you can lease them for 20% of the purchase price for a 30-day window. If you don't cancel, it will renew. If you do cancel, it will terminate that indicator. Then your choice as to whether you want to try something else. All right, so hopefully between what I've just spoken to you here and then reviewing the material here, that will make sense to you and there won't be any miscommunication here. So pretty hard to miss it. So for example, let me just go grab an indicator here. Oh, let's say you're going to look at the measured move, right? So if you come over here, so one-time purchase is 149, but if I just want to try it, 20% of that price there is 29.80 would be a monthly subscription. Right, so you see it, right? How that's different than the way it's been done before. Now this is, a new program. We think this will allow people a little more flexibility here without the cost of I've got X amount of dollars invested and I want to make some changes. Well, that means I got to invest another X amount of dollars, right? So we're trying to make this accommodating so that you end up with the solution that you're most happy with. That's what we're after here. So we come back here to home. So with that said, what I thought I would do here in this video, in addition to introducing the new program here, is look at a couple of combinations, I should say. Now, of course, we do have full packages that we put together here, full trading packages, which is our attempt to give you what we think is the best combination. But you may feel differently, or it may be that you have other indicators that are already giving you what you're looking for, whether it's a momentum based or some geometry based or volatility based, whatever it may be. There may be some redundancy there. So what we're trying to do is eliminate redundancy for you as the trader and a customer of ours. We want to eliminate any of that redundancy and make sure that you number one, that you don't overinvest and end up with redundancy, if you will, right? I mean, there's only so many ways to measure momentum or overbought, oversold. So we want to try and eliminate that and put together packages or counsel you or let you try to experiment on your own without the additional cost of buying a lot of indicators at full price, and say, let me try this combo, let me see if I like it. If I do, if I don't, right, then you're not just stuck with it. All right, so I think I've covered that. So with that said, let me move off of that here, and I'm just gonna go over a couple of things from the last week here, just to maybe give you some ideas. So I guess what I'm trying to do is to put myself in your shoes. So if I was looking at our suite of tools and was looking for the right combinations, of course, I have the benefit of many years of trading with these, and often I switch back and forth because for a number of reasons. One, often we're introducing something new, and so I'm going to demonstrate that. Two, based on the volatility in the markets, I might make a change to what I'm using in terms of my execution templates, right? So some of the longer term stuff, very little is going to change on a 15-minute and above. But for execution, I might make some changes or put together different packages. So for example, right now the volatility is so incredibly high, I think it's incredibly difficult to be trading with Renko bars, right? So just the bar size, the brick size, if you will, is so big that I just don't think you can effectively trade with, well, maybe you can, but I think the risk is too high. There's too much intrabar risk, right, with this level of volatility that we have, which is absolutely as extreme as I've ever seen it, and I've been doing this for 30 years. So this is really extreme volatility. So it demands a lot of discipline, and you've got to be very precise because the market is so incredibly volatile. Now, that's a double-edged sword, of course, because let me just looking at the chart here, right? So this is just Thursday, Friday, right? So monster day up, massive day down. So if you can get into some of these trends, of course, I mean, the opportunity here is massive, right? So, but okay, can you get into one of those trends? And not, as is so typical and is always the challenge, I think, with day traders, because we're so conditioned, the market gives and it takes so aggressively, and so the temptation is always to, if you get a decent trade, maybe you get 6, 7, 8 points out of it, is to get out of it too early, right? So one of the really frustrating things, and this, I think we all experience this, and here even just on a blank chart, after the fact trading, right? It's so incredibly easy after the fact, is it not? I mean, it's just something as simple as we're looking at here. Well, even if you're just looking at candles, well, of course, I'm going to buy it here and ride that, and then over here, I'm going to sell all. Look at all of this downtrend here. Of course, I'm going to sell all of that, right? I wish that it was that easy. So that where I'm headed to is trying to help you in terms of what's, again, consistent with your approach to the market, your personality, your risk tolerance. Some combinations that I might suggest to you for helping you make the best trading decisions that you can with the tools that we can offer to you. Okay, so with all that said, let me just start here. So I'm going to go ahead and just use the ES, I think, for most of the examples today. No, this is a 4,000 tick chart, right? So, I'm going to start right there. I'm using this kind of as an example so that I can see the full day here. But one of the first questions you have to determine for yourself, and this may be through trial and error and a little experimentation, is whether you're going to be trading off of tick charts or time-based charts, or could be a volume-based chart. It could be a range chart. Could be a Renko chart. You got to make that decision yourself, right? And that will influence, certainly with regards to our tools, what combinations you might put together. So I thought what I would do here is just kind of go through some of the priority items in terms of if it were me and I were putting together, I'm trying to put myself in your shoes. If I was trying to put together a package, what are the absolutely essential tools that well, in my case, I have access to everything we make, right? So that, I often find myself saying, well, I'm in a unique circumstance because I have access to everything. Well, okay, that's good, right? I'm trying to give you as close to that opportunity as I can. But that said, there are certain things that doesn't matter whether I'm looking at a tick chart, time-based chart, volume-based chart, Renko chart. There's certain things that they're always go on my chart. Always, always, always. And I'm just going to take a minute here and try and explain to you why. Some of it is luxury. Some of it is absolutely essential. So the things that I have on any chart doesn't matter, right? Always, always, always. I will always, well, first one's a luxury. This is our toolbar, right? So if any video I've ever done here, you've always seen me use the toolbar. Now, there are free toolbars out there that you can use. Our toolbar has some particularly, it's got some nice features in it, right? But again, it's a bit of a luxury because you could put a free shit. You can use the drop down, right? But that's kind of a pain in the ass when you're in a hurry, you're moving. It's so much easier to grab things up here. But that's a luxury. That's not essential. That said, that's on every chart I've ever done, or every chart I would ever pull up, every video I've ever done, because I use it all day long. Now, if you're not familiar with all of the tools that are in here in our custom tools, well, of course, there's a video underneath that video on the website. So if you're curious about some of the things up here that are uniquely ours, well, then that's a video to go watch. But that's it. Okay, so toolbar is always on. The next thing that is always, 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 always on every chart, and I would encourage you, if you're not using our indicator or somebody else's indicator, I want to encourage you to draw it yourself. Again, luxury, right? So putting the initial balance on, which is where I'm headed here. You could draw it yourself. Absolutely. You could draw them yourself. Kind of a, all right, so maybe this is a luxury unto itself to have a piece of software do it, but I sure as hell wouldn't have a chart where I did not have the initial balance on it. And I can just use this last week just to show you how significant it is. Now, we do have dedicated videos on the initial balance. If you've not watched those, I would encourage you to. I would tell you that I would include VWAP in this. Of all the levels on the board, as you begin any day and as you trade throughout the day, I would tell you the initial balance are the two most important, right? VWAP would be a close third, but you have to have the initial balance on your chart because it dictates the kind of day we're going to have. Now, you might say that, well, why does the first hour matter? What's the big deal? Well, it matters for a number of reasons. First, if we look at the day that we're likely to have here, it's how we will define whether we're going to have a range-bound day or we're going to have a trending day. And you'll see the market respond to the initial balance every day, right? We can determine what kind of day based on how we're responding at the IB highs and lows. So, of course, the first question you get to consider is, well, are you going to trade before the first hour is over and the IB is set? Well, to some degree, that's why we give you both the opening range, the first 30 minutes here, the opening range in yellow. We give you and you can put the background on that if you wanted to. So you can define that first 30 minutes. Some people will tell you that that's enough to get some sense of it. I would disagree with that. I think you need the full hour. But we do give you that capability. So if you're looking to trade within the first 60 minutes of the day, you've got some reference. Okay, where'd we open, right? And we know that 90, well, maybe not that high. A very high percentage of the time, the opening move is a head fake, right? So if they want to take it down, if they want to take it up, they'll take it down. They'll take it down first. If they want to take it down, and they being those that can move the market, if the anticipation is, well, it's going to be down, right? They'll take it up first. right? Very, 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 very common, right? Something to look for. So in fact, I will post in our room here, if we open straight up, right, bearish, right? If we open straight down, bullish. Right? And just looking back at the course of the week, well, here we open, right? We go up, a little retrace, then up, we establish the IB high. Now here we'll use Friday as an example. And then we'll go back through the week here. When we get to the IB low, right? So if you aren't familiar with the trade here that we've identified here, it's a Trade Devils original. I would encourage you to watch the IB video, right? The first test of the IB high and the low. There's an algorithm that sits there that fades it every day. Right now, that doesn't mean that it can't be broken. Right here, an example. Right, we didn't even stop. Right, just ripped right through it. Right, there was news driven. There has to be something driving the market, right, to break those and break through that algorithm is right there. But the other thing that will happen is that when we get outside of the IB and we stay, right. So once we hit the IB, there will always be an attempt for, in this case, right. If bears are in control, the bulls will be trying to get it back into the IB. Right, you'll see it every day. There'll be a battle at the IB high or the IB low, because here bulls are trying to get it back in, bears are trying to keep it out. Because what happens is once we break, as we did here on Friday, once we break the IB and on the first attempts to get back in, we start to fail. This will bring in the trend followers, right? The bigger muscle, if you will come into the market and participate because we have a trending day. We're outside of the IB. We've failed to get back in. This is a retrace. It happens to be a perfect measured move. But now we just grind down the whole rest of the day. Here, let's go back to Thursday here, and I won't spend the whole video on this. This probably have to be a couple of videos, but. So we get a little pop up, and then we're straight down here. Now here's the battle at the IB low. Bulls are trying to get it back in. Now once we get the news here, and all the earnings are popping and the market starts ripping, this is buy programs, right, at full throttle, right? There's not even a pause here. It's just straight up. Now, let's go back here. So let's go to Wednesday. Wednesday, a more typical day. This is actually the norm, right, where we would push a little bit below the IB here and come back in, push a little bit above here, we're back in. This is your range day, right? This is actually, for a day trader, this is a better trading environment, because once this starts, you can't get in, right? They don't give you a chance to get in, right? The only way to participate was you had to sell it after that massive day. Once this starts, you might as well take the day off, right? There's very little opportunity to get involved here on that. You're going to get in here? No, I don't think so. So these kind of days actually tend to be better for day traders, the range-bound days. Right, so let's go to what did I have? Thursday, Wednesday. Here's Tuesday. Here's they're trying to get back in. Right, we open this. In this case here, we're coming from the overnight. We just keep going down. So here's the battle to get in. We're trying to get in. We're drifting. One last attempt. Right, nice little double top up here. Nice little attempt. Another attempt. They can't get out. Right, and then look how far we fall. Once it fails to get back in, look for the market to push lower. Right, the trend followers will come in. Here's Monday. Here's a pretty typical day. A down, right, up. Now here's the IB high, right? There's an algo fading that, right? It goes coast to coast, right? We go from high to low. Reaction, here's the IB, well, let's see. Yep, here's the first test of the IB low. There's the trade right here. So on Monday, the sell side, there's your nice winner to the IB mid. Here, see, that's the first test of the IB high. Here's the first test of the IB low, right? Goes right to IB mid. Those are, what's there? That's a grand, right? A grand on both of those trades, right? It's the easiest money on the board every single day. No, I don't know. No other educator teaches it. And we only found it because we study the IB and how the market responds there, right? So every day, I promise you, right? You track it. You'll find. Well, you certainly would want to be paying attention, right? When we get up here. So, but then here we push. Now we're out. Now look, right? Once it breaks, it becomes the support. Now right back to test. And then we get that little kicker here, and I think that's the last week. But a decent week in the face of all of this volatility, right? Just massive. So you got a nice variety here. You got trending days, you got a range day, and then you have massive uptrend, massive downtrend. You got to know where these are, guys. It's mandatory. It's not optional. Again, if you're not going to use our indicator, you draw them yourself. You have to know where they are. Okay, so how am I doing on time here? Okay, let me... let me carry on here, and then of course I'm going to have to split this into multiple videos. Okay, so that being said here, now I've kind of dwelled on the IB, but it's so important if you're not using it. Test that, right? Again, instead of having to invest in the IB and buy the thing, right? To be sure, well, let's perhaps you lease it for a month and see if this guy keeps talking to me about the IB. Let's see if it adds value to your experience trading the markets. I think you'll be pleased with what you see. The next thing that I would add immediately, right? So if I'm just default, right? The first things that come up, the initial balance toolbar. The other thing is the AutoFibs. Because the AutoFibs are showing me where all the potential 50s and golden zones are throughout the course of the day. Now, but this is a distinction that people, and this is a perfect example of why this lease program I think is effective, and I think it will be popular amongst our customer base. We have two ways to identify the measured move. One is the measured move indicator, and the other is the AutoFibs. The measured move indicator shows you every measured move that has happened, right? It doesn't give you the real-time identification because the market has to move a certain distance to confirm the pivot. Whereas the AutoFibs are going to show you where all the upcoming 50s and go. So for example, if I do turn on the measured moves, okay, so so number one, if you've not seen this before, your mind is about to be blown. Right now, it doesn't matter what size chart we were using here. I could be looking at a 60-minute, I could be looking at a daily, I could be looking at a 1 minute, I could be looking at a 15-second. It does not matter. This is the dominant algorithm in the market. Well, let me rephrase that. Of all the algorithms in the market, this is the one that we can track, and it's incredibly active on both sides. So what you're looking at here on this 4,000 tick chart is every measured move that completed. If it's on here, it's a measured move that completed. Now, so you look at that and you say, well, how is that helping me? Well, let me try and explain the difference between the two. So when this is retracing here and we hit that 50, the AutoFibs are going to identify it as the 50 because it's there in advance, right? It's looking at that swing. The measured move indicator isn't going to show up on your chart until it gets a certain distance from that pivot. Otherwise, and you can understand why if you think about it, because if we just get a few ticks and then we pop up here, well then it's a false signal, right? It's not a measured move that held. It would just be a broken measured move. So it has to get a certain amount of. Now it could still fail. We could still do this. But I want to at least know that it's there. But we've had customers say, hey man, that measured move is, what's the value if it doesn't pop up until I'm this far away from the pivot? Well, it's twofold. One, it should absolutely burn into your brain how important these are. Right? When you see through the course of the week how many of them hit. Right? If it's on here, that means it got to target. Right? If I change this to a 1 minute, right, there's going to be 100 more. How many, right? Before you realize, how many do you have to see of this before you realize how dominant this algorithm is? Look at this series here. Here's 1 coming down, 2 coming down. They hit their targets here. Now we start going up. Here's 1 going up, second one going up. All right, 3, 4, 5, 6. How about coming down? We hit the targets here. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 measured moves in that trading. That's extended hours, right? 9 of them. All right, how about this day? Here's 1, 2, 3, 4, 5, 6 of them that day. How about this day? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 on that day. And this is a 4,000 tick chart, right? Which is the equivalent of a 5 minute, some maybe even a 10 minute, depending on the day. Again, all the way down, right? So here's, again, I know I get distracted into this. We open, right? You're wondering, oh, what do I do? Look what we do right here, right? Where's the target, right? The IB low, right? The target, ends up being the IB low. Here's the battle to get in. Now, again, this is you have to know this, right? Swing, retrace. What do we do here? Right, there's the target, swings, right? There's the next one, a cluster, right? And it's just nonstop, right? If you don't know where these are, you've heard me say this many, many times. You are walking through a minefield with blindfolds on. because you'll buy or sell right into them. You have to know where they are. You have to know where they are. It's just there is no way this can't help you, right? So the question becomes, the market's going straight up. How are you going to know to sell that? Because of course here, in hindsight, we look at this and we go, well, yeah, of course I'd sell that, right? That's great, right? Perfect, right? What came right up here, we went into this little congestion here. Oh yeah, of course I'm going to sell that. No, really? No, we're going to talk about, right, how you can be definitive about what is the criteria for you to sell that. But in hindsight, right, look how easy that is. Oh my God, of course, right? Golden zone, of course I'm going to sell that. Wish it was that easy, right? Oh, here, retrace at a 50. Oh yeah, of course I'm going to sell that. Right? Because our minds fill in we do that. We do ourselves a disservice actually, because we see it and we go, oh yeah, of course I'd sell that. Oh yeah, I'd sell that double top. Yeah, I'd sell that. No, I don't think so, right? It's not that easy, right? So there's got to be more to it. How do we increase? What's the criteria for taking that trade? It can't just be, oh, well, there was a 50 there, so I would have taken it. Right? There's got to be more to it. So when we're talking about the AutoFibs, what that's going to do here, so it's taking, so I have them set to go off to the side. So the AutoFibs can either be on your chart like this, which can be too much, right? It can be too many lines on your chart, or they can just be off to the side. So if we were coming up to this, I might, I can see that they're over here. I can see that it's over here, but I might do that. I can just do, we have a hotkey, off on. Same with the measured moves, right? So if this is after the fact. If I'm right here looking at that, oh, do I want to sell that? Now here, this is the end of the day, of course, right? But if it was during the day, it's kind of useful to have that come up. Because what I absolutely want to be sure that I don't do is buy into it. Right, which happens all the day, right? Because all day long, because retail, most traders don't know that's there, right? They don't know it's an algorithm. They don't know that it's going to be there, right? They'll buy right into it, right? It's the same thing. They'll sell right into it. So it's something you have to be aware of, and I'm just kind of showing you that in the context of all the things that I would encourage you if you're going to do some trialing of our tools. Well, measured move, well, that's going to burn it into your brain of how significant it is, right? But can it help you in the trade? Well, it's not going to help you take that trade right there, because you're not going to know it's there if you're just using the measured move until it gets enough distance from that. Now you're going to see it, and you'll see the target, but it didn't help you at that pivot make the trade. That's what the AutoFibs are for, because they're going to show you in real time where they are, whereas the measured move is showing you after the fact. Now, there is definitely benefit in knowing that I've got an algo target down here, right? I mean, that's probably a $1,500 move. I mean, there's definitely benefit there, but if the criteria is, how do we help identify the opportunity at that pivot? That's what we're looking to do, and that's the difference between the measured move and the AutoFibs, right? So then of course there are videos on those as well. Okay, with that said, because I don't want these going so long, right, and I've been a bit long-winded here, let's consider this just the introduction of that of that new program, and then I'm going to follow this up with another video here, and we'll put this in a dedicated playlist. I'm going to follow this up here so that the videos aren't too long, and show you some combinations. So let me pause here, and then we'll put together some combinations, and I'll show you a couple of tools that I think will be useful in helping you determine which indicators, assuming you're looking at a combination or perhaps adding one of ours to the tools you already have, that can be effective in helping you identify the criteria that you have in your trading plan to enter a long or a short. What is that? And if you don't have it defined, well, okay, there's the first problem. Or what's the criteria for you to enter a trade? You would want to have that very clearly identified. If not, well, I would encourage you to have it written down. But if not, have a very solid mental checklist of what the criteria is for you to take a trade. Right? Maybe it's very simple. Maybe it's just a retrace. Maybe it's a supply or demand zone. I don't know what it is, but it has to be clear in your mind so that you're not kind of improvising throughout the course of the day. Right? That's a recipe for disaster. Okay, so let me pause here, and then we'll come back and we'll look at some combinations here and things that I think will help you make better trading decisions. Okay, back in a second. Part 2.